Okay, now Euro USD. I will do the same. I will start from scratch, looking at all the fibs, everything after the FOMC moves. The fib didn't change a lot, but just to refresh the mind, it's always, let's say, interesting to look at it. So we are here on the weekly chart of the euro dollar, and we just did Dixie that gives a lot of information already. So if we look at I checked this swing, but there is really nothing interesting there. It's no more mandatory for anything, I think, which is not the case on Dixie. But anyway, so if we take this swing from these highs here in 2008, 2008 to 2017, we see that this is a big long-term fib that is holding the price. So if we or when we will be at 125.27, we will have a reaction for sure. And if we would be at 116.95, we will have a reaction too. What is funny, if you look at that and you look at my chart here, the 116.95 is a confluence with the 38.2 we have there, and is the bottom of all those order blocks. So it will be for sure a big reaction when we would go there. And I think we can come back to this area, but that's not for today, of course. So we go back to our fibs, which is the basic job we need to do every morning. So, or I mean, at least check them. Now we had one fib, which is this swing here, one of the last big swing from 2016 to 2018. We see this fib has been important by holding the price here in 2021 in January this year and creating a confluence here with the big black fib, which is the bottom of this M formation, which is what I showed you here. We have it here, this 38.2, so we know we have a very strong thing in this area. For now, it's not interesting because we have nothing of this fib in this area, so we just hide it. Then what we can look, for example, is this swing here. Is this swing interesting for us? Yes, it is. Why? Because it has just stopped the price here on the 88.6 fib of this move down, telling us that this move down was not ended because we respected this fib. And due to the fact that we respected this fib, we could expect a little bit more of move down, and that's what's happening now. So this one is interesting. If we go a little bit deeper on a shorter time frame, we would see that we had a lot of reaction in this area with the 78.6. I mean, whatever we put it, we can just reverse it. It will be easier. So on the 21.4, 23.6 fib, we see many times it has been holding the price, which is the 121 or 25 area. But for now, it's not a big area for us. Just important, we have the 38.2 at 118.22 or 23. So that will be another area where we can expect some reaction, and we will see later that we have some confluences in this area. So I will keep this blue here. We keep the blue and that one. Now we take smaller swing, which is this swing up, and look where we are. So this swing up, for example, created this big level here where the 21 for fib is. We have pierced under it, but we need to look at it when we will come back, because this fib has been very important. Look here and look here how they have been holding the price. So any bounce could stop around 119.51. So that could be a good place to become short again, or 119.90. That's the two areas where we could see a potential bounce coming back, and we would sell it inside this pullback. Okay? Now, I will hide that one because it will be a little bit tricky. Just as we did before, we will put the lines here, so we have the remembering of these two important area, and we avoid to have a chart too crowded, too complicated to look at with a lot of line in all the direction. Okay, so let me take this one off. Good. This is 2360. Okay, this is 21.4. Great. Or 78.2 and 76.4. The numbers doesn't mind really. The most important is we know it's important area for us. Okay, so we keep that here, we lock it, and we have some more information on the chart that will be very important when we will be inside a move. Great. Now, if we go a little bit on, this is the one we just saw. Okay, so now if we go a little deeper inside this analyze, we see we have the 61.8 of this move up. Now we have here a confluence with a 50%, so you see how and why this level will be very important as well as that one. And if we go even more inside, we see we have here a big weekly trend line that we have for now on a weekly base. This weekly trend line has to be looked on a weekly base, so we could probably come back inside this weekly trend line next week. Even we could come back inside, bounce in that area, and go and see lower. So that's what we have now on this Euro USD. It's cleaner for me to look at the I put all the feed now, and you see what you see, that the next big confluence, in case we would break these actual lows, this next big confluence of area will be 118.40 up to 118.20. Okay, 1840, 1820, that would be the next area where we could expect some reaction with a big point here at 118.20. That could be a bottoming before a bounce, and then we would come back. If we break that line, that trend line for now, we would go there, bounce back in this area again, or perhaps higher on this 76.4. So we have all the fib here, but then when you need to go and look inside, you just keep the one you need, no? And then we could do that, come back here, or do that and come back here, but that would be a very much deeper move than what we are looking at. I would not be surprised to see something like that, a comeback, something like that, and then we will probably resume higher if when Dixie will go for the second leg lower, but that's in more time. I think in several months. So we have this big weekly trend line here with a nice support here. So if we want to have a very clean trend line, we just take off all the fibs. We have still this level that is mentioned here, so that's why I like to put them on the chart. And you see that we have a good accuracy here for this trend line. We have the second touch here, and now we are trying, or we will break through it. If we look at the weekly, it could be, if we bounce as I expect before the close of the week, it could be just a little bit of wick under the trend line, and then we would stay above it. Okay,